The Reserve Bank of India has announced no change in interest rates in its monetary policy review on Wednesday. That's contrary to what the expectation was. A lot of people were expecting a 50 basis point cut, but even the consensus number was higher than no rate cut. 25 basis point cut was definitely expected. So a surprise decision. The RBI's judgment of the economy seems to be that you will grow at 7.1% on a gross value added basis. So not a significant cut from their earlier estimate of 7.6%. Joining us to talk about the decision and also the demonetization story that's playing out is Dr. Ajit Ranade, Chief Economist at the Aditya Birla Group. Thank you so much, sir.
Thank you.
Sir, first question, what did you make of the RBI decision? No, very few people were saying no rate cut.
Yeah, I think the no rate cut was perhaps a little bit of a surprise. But I also feel that a 50 basis point cut was perhaps being excessively exuberant. I mean, I know that the bond markets had factored that in, and some people probably talked about even bigger drastic cut. That possibly was too excessively exuberant and too optimistic, simply because, first of all, as you know, the yields in USA and other countries have gone up quite a bit, and the yields in India had dropped. So the gap is narrowing, and at a time when the rupee is a little unstable and there are signs of weakening, you need to be careful about how aggressively you cut rates here. And that's why I feel that this no cut at all, please remember, also is accompanied by a removal of the 100 basis point CRR, which was increased, 100% CRR requirement.
Yeah.
So by removing that, that's kind of a relief to banks. Yeah. So it's not as if nothing has been done.
That's true. So they said that they in their estimate, growth will be down to 7.1% in GVA terms from 7.6 earlier. So in some ways, by saying that the growth hit is not going to be very significant from this entire demonetization thing and not cutting rates, they're also managing the optics of the situation, right? They're trying to say that we are not particularly concerned about what's happening right now from a growth standpoint.
Yeah, so there are two parts to it, Ira. One is that there's a Q2 story that they've said, that there was Q2 momentum was lower than expected. Yeah. So the slowdown was visible even before the demonetization decision. And secondly, the impact of demonetization. As you know, many sectors, especially which are excessively dependent on cash, consumer sectors, they are feeling the pinch. So there will be a cut, there will be a drop in consumer spending and therefore economic activity. It's possible that it's transient and therefore a sharp V-shaped kind of a hockey stick recovery is likely later on. But at this stage, the combined impact of that Q2 slowdown and this temporary transient impact of demonetization is what is captured by this 0.5% revision downwards.
But a 50 basis point cut in total, you think, is a realistic assessment of how the economy will shape up post this demonetization? Even if there is a hockey stick, I mean, it will take 2 quarters for it to rebound?
Yeah, we had been doing this exercise even ourselves. We felt that you see, it's 0.5% over the whole year. So, which means that you can actually go up to 1 full percentage point for the second half. So if you see it that way, I think more than a 1 percentage point transient hit seems a little unlikely. Okay. It could be 0.5 to 0.75, so that's a little debate. So that means the impact on the second half of this fiscal year could be between 1 to 1.5%, and that's quite a large. So I think this is a reasonable assessment of how much hit we are taking, which is a combination of Q2 slowdown and the demonetization.
Okay, and the second round impact, nobody has a clear understanding on how
it's too early to say.
What are the channels? The negative wealth effect is what everybody was talking about, sir. Is that what?
Negative wealth effect is not known at all, and in fact, if most of the currency is going to come back, then I'm not even sure how much is the negative wealth effect. There is also the consumer spending effect, which is what I told. But at the same time, we have this big takeoff happening in the other channels, the cashless channels, the e-wallets, the migration from the traditional to informal to formal retail, from kiranas to supermarkets. Those places are seeing very high growth in sales. So we have to see the net impact, and therefore I'm not sure what exactly will be the net negative impact. There will be some negative impact, but I'm not sure, it's anybody's guess. Is it going to be as severe as -2%? I don't think so. Minus 0.5% looks like more likely.
Okay. So there was this whole debate also about, what bearing does this have on the RBI's balance sheet, and hence, is there an option for the RBI to give a special dividend to the government? I think the governor worded his answer quite carefully. He said the withdrawal of legal tender status does not have any bearing on the RBI's balance sheet. Do you read anything into that? Is this
clearly the currency which is issued by the RBI is the liability of the RBI. they are bound, by law to redeem these promissory notes. So even if you had some 14 lakh crores were out there, and even if some of them didn't come back, that promissory note and that liability continues to be applicable. The liability has not been extinguished just because the currency was not returned back. It ceases to be what they call legal tender, but it's still a promissory note, and the RBI is bound to honor those promises. So if you want that liability to be extinguished and therefore an advantage on the asset side, then if liability goes down, then you have a gain.
Yeah.
If you want that, then a separate decision has to be taken. I don't know if it's a board level decision or the government decision or an ordinance which says that liability now stands extinguished. That's a separate decision. Then only you get a balance sheet advantage. That's not enough. From balance sheet, you need to convert it into a dividend. A balance sheet is not a P&L. So a dividend flow is a P&L item. So you need to transfer that extra benefit from the reserves of the balance sheet to an actual dividend, which can then be given to the government of India. So several steps are. So I'm not sure all that is. And given that at a time when the rupee is, as I said, needs some support, there are other resources that the Reserve Bank needs. At a time like this, I don't know if it would be wise to completely, even if there was a fiscal gain, to give it all away in the form of a dividend.
Okay. What happens if we get all the currency back? There's been some people speculating that you may get actually a little bit more than that if there was counterfeiting and that money comes back into the system. Unlikely or unusual scenario, but if it happens, what is the impact?
I think it's unlikely. First of all, I think the RBI is saying that something like 11.5 lakh crores have come back.
So far.
The total number was 14 lakh crores. So we still have some ways to go. The surprise is that people were making these wild guesses. See, I think now it is clear that those were all guesses. There was no sort of scientific or any sort of solid basis to saying why 30% will not come back. So my guess is that ultimately we may find that only a small percentage of the money has not come back. And some of it maybe not just because it's like black money. It might be simply that the money was lost or something, it was damaged or something. So it could be various reasons.
Yeah, no, but if there was such a large amount of counterfeiting, I mean, I don't know what the counterfeiting amount was, but the RBI is using that as one reason to justify this. That counterfeit money could potentially come back into the system, right?
Counterfeit, there have been some estimates. It was quite small, I think. So the evidence of actual counterfeit and the estimates were, I don't know, 1,000 crores or something.
Less than that, actually.
Yeah, much less. But perhaps that also signifies the potential that I think Governor in his speech said something like the potential for very high quality counterfeit. But even then, I'm sure that is not the only justification. So there I must say that the demonetization decision should not be seen purely in terms of cost-benefit analysis, because I don't think it was done on that basis. There is a deeper conviction which lies beneath this, which I'm not fully aware of. What it has done is it's like a, what do they say, game changer. It's like a jolt that, it sort of resets some cynicism in the system. I think that it's possible to take really big decisions which can have potentially big impact on whatever illegal, unaccounted wealth or black money. I'm not sure. The jury is still out of what exactly will be the impact after we have the full understanding. So I don't think we should see this decision purely in terms of the cost benefit. It's not like a policy decision taken with due cost benefit analysis. I certainly don't think it should be called demonetization. The RBI also is not calling it that. Yeah. Demonetization means discontinuing high value notes, which we are not doing.
Yeah. So there's also, at least us media people are wondering whether this entire process has, raised a bit of a question on the credibility of the RBI, the way this whole thing has been implemented, question of whether the central board recommended it, was it the government's plan, those are sort of intangibles, but would you pay much attention to the image?
Yeah, because I think the governor himself clarified today that he said that the board did meet, this was a board decision. As I said, the only part which perhaps we need to think about is why was their secrecy and why was it done overnight. But that's why I said that decision I don't think was based purely on a cost benefit consideration. There was some other deeper conviction. As I said, at this stage, all I can think of is like it's a real reset to people who are cynical. Nothing can be done about corruption. Nothing can be done about. The Prime Minister has promised some really big dhamaka kind of decisions in the new year. So perhaps once we have all that information, we'll be able to piece it together. Remember, this has come after a succession of other decisions, like the Jan Dhan Yojana whole scheme, which in the record time you go to 240 million accounts. Then you have the income declaration scheme. You have the Mauritius Treaty. being amended. So all these are steps. So once we look at it, in hindsight, perhaps we'll be able to get a better picture of the jigsaw puzzle.
Just last question, coming back to the economy. So I guess the budget will be the next point of focus. Yeah. So how much wiggle room do you think the government has in terms of providing some sort of fiscal stimulus if required? Will the FRBM committee be the game changer there?
So the FRBM committee's report is not in public yet. Their recommendations are not known. Secondly, as you know, GST is a phenomenon which will add to the fiscal situation. I mean, GST is supposed to be positive for fiscal deficit. We still have relatively moderate oil prices. About the next year's forecast is around 52, 53 for Brent, which means that much less pressure on the fiscal as well as the current account. So there is wiggle room, and I personally think that I hope the FRBM committee recommends not a hard number to be complied with every year, upper limit, but a band which on average over a business cycle. So you can say if you want to say 3% of GDP should be the limit, but not to be met every year over the course of an entire business cycle, which can go over 5 years. So in bad times you should be allowed to go above it, and in good times when the collections are good you go below it, but on average you come to 3% over 5 years. Something like that. That approach is required. I firmly believe that India is a young country, young demography, and our current tax base is 4%, right, of population, but we are going to widen the tax net hugely in the coming generations. We are going to use the fiscal resources to build infrastructure which is going to be long lived and used by unborn generations. So surely passing on some burden to unborn generations, future generations, makes logical sense. That exactly is what fiscal deficit is about. You do deficit spending today so that tomorrow's generation pays for it. So why stick to 3%? Personally, I think we should be a little less hung up, although I know economists and rating agencies caution, but I think India's situation is unique in terms of its young demography and its developmental needs and its high growth rate and so on.
So you won't see it as fiscal imprudence if we get a range to work?
I think it makes more sense to have it over a business cycle.
Okay. Thank you, Dr. Ranade. Thank you so much.
Thank you.